All right, good afternoon, everybody. It is Friday, April the 4th, 5:02 p.m. And this is a Do Not Panic, the Zombie Apocalypse Has Not Occurred video installment. Wanted to share some thoughts on the recent market meltdown because it can't be described in any other way than a meltdown. And before I share with you my thoughts on the market, the first thing I want to tell you is please do not panic with your money. Those of you who have retirement accounts and are stewarding those, first thing is do not panic. I want to share some biblical thoughts. Some of you guys know that I'm a Christian pastor, and I wanted to share some thoughts on what the Bible has to say about these days that we're facing. And I do believe that we're living at the end of time. So here's what I tell my family. I tell my family that we should live as if Jesus is coming today, but plan as if he were going to delay. And so we have to have all our affairs in order. We have to have our life right with Christ, every single moment, every single minute. We don't know how long we're going to live. So Jesus could come for me, today if I were to pass away, and he would come for you as well, because that's the end. Having said that, we don't know when the end of time is going to come. But here's what the book of Revelation talks about when it comes to the merchants of the earth. It talks about there in Revelation 18:4. I'm going to read it for you. I heard another voice from heaven saying, "Come out of her, my people, so that you will not share in her sins, so that you will not receive any of her plagues. For her sins are piled up to heaven, and God has remembered her crimes." If you read through Revelation 18, you're going to find a fascinating combination of a religious, political, economic system that is intertwined. So as Christ followers, we know that at the end of time, there's going to be a lot of social, economic, spiritual, religious upheaval, and a lot of things that are connected that shouldn't be connected. But the Bible says that God is going to judge this system, and the Bible describes it as Babylon. And it's interesting to me that it talks about how quickly this thing falls apart. Notice what verse 9 says: "When the kings of the earth who committed adultery with her and shared her luxury see the smoke of her burning, they will weep and mourn over her, terrified at her torment. They'll stand afar off and cry, 'Woe, woe to you, great city, you mighty city of Babylon.'" Check this out. "In 1 hour, your doom has come." So those of us who are Christ followers, we're in the world, but we're not of the world. And yet we do participate in the economics of the world, and we do so with a Christ focus. We do so with a stewardship mentality. As managers, we don't consider ourselves owners. But it's interesting that this thing happens in a flash, the destruction that comes on the end of time. So having said that, this is ugly. Those of you who look at this chart, this is the S&P 500. This is a dramatic drop in valuations of people who have stock market portfolios. I'm looking at, from the top, about a 17% drop, if you could see the tool that I'm using here on TradingView. So what I want to tell you is that this is not the moment to sell anything. This is not the moment to panic. And my rationale is this. A very, very, very solid disclaimer before I tell you what my rationale is. The first thing that one of my mentors told me about stock market trading is, you don't know anything about anything. And he didn't use that nicer language when he described it to me. He goes, there's one thing that you have to understand. You don't know anything about anything. So when you watch TV, when you watch people on, C-SPAN, whatever, Fox Business Channel, whatever, news network, Bloomberg, all this stuff that you hear this news from, these talking heads on TV, they get paid. And they get paid based on the eyeballs that they drive to their shows. So most of the time, they have no idea what they're talking about. They only want to sound like they know what they're talking about so that they can sell ads and make money. And so there's been studies that have been done that are hilarious, to be honest with you, where they'll take a monkey and they'll have the monkey throw darts at a dartboard to pick stocks. And the monkey has been shown to beat hedge fund managers, money managers over time, or not over time, like over a segment of time. But it's just hilarious. So don't believe the talking heads. They get paid to be on TV. And if they didn't have something to say, they wouldn't get paid. The reason why I say that is because people don't really know why something is happening. Now, there is right now a very, very strong catalyst that I believe is driving this, and it is the Trump tariffs. The market, from people that know way more than I do about this stuff, the market does not like uncertainty. And so this is not a political statement. I know that some people think that, I do make political statements sometimes when I'm really not making a political statement. It's just a statement of fact. as far as I see it anyway. Nobody knows why the market is tanking. The catalyst might be the Trump tariffs. That's one theory that I'm willing to, go along with because it's uncertain. And I just want to share with you what part of the uncertainty may be happening right now. Trump, the other day got on TV and he kind of touted this. I guess I don't know what he called it. Some pretty hilarious name of like Day of Freedom or something. And he said that we were going to reciprocate tariffs on other nations that were charging us tariffs. So here's like one of the graphics that shows the tariffs that people charge us to sell products in their countries versus what we are now imposing on them to sell their products over here. I remember experiencing the tariffs when I used to live in Sydney, Australia. In Sydney, Australia, it was hilarious. Back in the day, a pair of Levi's 501 jeans was $100. Now, because I grew up in Miami back in the day, if you had Levi's 501s, you were, super cool. And I couldn't get over the fact that in Australia, a pair of jeans that cost $30 in the US was going for almost 3 times that amount. Maybe $40 here in the US. You could buy a pair of Levi's 501 jeans. Now, the reason why I'm mentioning that is the only reason why Levi's 501 jeans cost $100 in Australia was, you guessed it, if you're figuring out that Australia imposed a tariff on American-made products to come and sell it inside Australia. That's why they were so expensive. It wasn't the shipping. Like, clearly the shipping wasn't that much. So here you have Australia here. It's showing a 10% tariff that they charge us. And so the only thing that Trump has done is, said, okay, you charge us 10, we're going to charge you 10. It's interesting that some of these countries, it looks like he hasn't gone above their tariff, right? So he's just kind of reciprocating, matching, or coming somewhat relative to their tariff. So, like, for example, Thailand, I think this is interesting. Thailand charges us right now 72% to sell anything American made in Thailand. And so Trump is like, hey, we're going to charge you 36%. So he's not even matching them. That's a huge tariff. Now, the reason why these countries charge these tariffs is because they're trying to protect their local economy. Makes sense, right? Everybody wants to protect their own producers, their people, right? So this is kind of like the debate, between the conservatives and the liberals, that whole thought of like, we got to put America first. We're giving away in a trade imbalance, we're giving away all this stuff. And you could go listen to people talk about, the pros and cons of tariffs. I'm not here to advocate for or, say that tariffs are good or bad. I just want you to see what might be the catalyst of what is causing uncertainty right now. And this is my best guess. Remember, what's the number one thing about stock market trading? You don't know anything about anything. So, disclaimer. Here's what I think is going on right now. The market is tanking right now because the people with the money, the people that are the power brokers in our world, they're waiting to see how this is going to impact valuations, pricing, politics, government, bickering back and forth. So they're waiting to see how this is going to play out. Now, having said this is just one theory of what's going on. Like, some people who are super Trumpers, and they think that Trump is like, the second coming of Christ. I don't believe that at all. I know that some people do. They, think that he could do no wrong. Some people have said that, Trump is playing 4D chess. They give him a lot of credit. I think too much credit. And what they're saying is that Trump is playing 4D chess in that he is trying to tank the market so people move their money, the retail people, from market to securities, which in turn is going to lower the interest rates. And then our debt, which is clearly out of control, they're going to be able to reduce the debt that much more because the interest rates are going to come down as people move out of the market. I don't know. That sounds like some, conspiracy theory to me that may or may not be true. It is what it is. I'm looking at these tariffs, 10 to 10, Australia 10 to 10. It's almost like tit for tat, The question that I would have, and this is not a political statement again, is that how is it that we would think about this from a financial perspective, why would we allow people to charge us and not charge them? And I know that that's just a simple thought. Like, I'm like, we're giving away our trade imbalance has never been higher. And we have, like, our deficit is out of control. We're trying to figure out how to bring that down. You know, if I was able to pull behind the curtain, I'm very cynical. I'm a Gen Xer, so I'm very cynical. I would imagine that if we really want to reduce, our spending, that they would look at defense spending, and they would go after the Pentagon. Doge would go after the Pentagon. It doesn't seem like they're doing that. But then again, we haven't seen the Epstein files. We haven't seen the JFK files. We haven't seen the actual files that they promised us. So, I think part of me thinks that everybody's in the power is all in on it anyway. And here we are trying to figure this out. All right. So why is this kind of a thing? Because the market, I think, is reacting to the uncertainty potentially of these tariffs. They're trying to figure out how the world is going to react. And they're pulling money out right now. Who's they? This is not retail people. The people that are pulling money out to be able to drop it this far is the hedge fund managers. It is the money managers. They're pulling money out because what they're doing is that they're waiting. They're waiting to see what's going to happen. Now, I'll also tell you something about money managers. Money managers do not make money unless they're invested in the market. They have a bias that they cannot sit on cash. One of the things that I'll tell you about being a retail trader or a retail investor is that we have the luxury of pulling our money out and sitting and waiting. You may not know this. Money managers do not have that luxury. Money managers have to have their money in the market in order to justify their salaries, in order to generate returns, in order to be able to charge commissions. So they do not have the ability in the long term of just sitting in cash. Another reason why not to panic. Now, I already gave you the Revelation scenario, right? So in an hour, this thing could come down. Jesus is coming. Yay! Can't wait to see you, Jesus. Can't wait for you to come. All right. I don't believe that that's happening right now. But again, I don't know anything about anything. But what I'd like to do is I'd like to point out the recent downturns. If you notice this downturn in the SPY right here, this is the daily chart of the S&P 500. If you notice the recent downturn, this is March of 2024. Okay, this is a pullback. How deep was that pullback? That pullback was 6% pullback. All right. Then we had another pullback in August of 2024. What happened? How deep was that pullback? Bam. The pullback was 9%. So you have a 6%, approximately 9% pullback. This pullback is significantly deeper and is significantly more meaningful because it pulled back 10, went back up to -5, and now it just ripped down. Okay? We're down 17%. When is the last time in the recent history that we saw a market pull to that degree? I've drawn some lines here. Please don't get confused with the lines. But this is the market climbing. This is post-COVID because this is 2021. And then check this out. This is why I drew these lines, and I hope I'm not confusing any of you. I'm trying to keep this as simple as possible. If you look at this line right here, December 2021, this is when we began a market downturn that lasted all the way to October 14, 2022. I still remember the park bench when I was sitting in Italy when this thing hit this low. I remember where I was. There was this dude trying to sell me some roses, and I was like looking at the market, and I actually pulled money out, which guess what? That's kind of like what I do. Pull it right out at the bottom. And you live and learn. But what I want you to notice is this, that from 2021, December of 2021, the market did not recover until, check this out, July of 23. Okay? And then even then it still dropped some and never broke this high over here. I still remember when we were looking to break new highs. Look when it was, December 2023. And I remember thinking, are we going to go into 2024 into a bull market? Is this just window dressing? Is this people just trying to, show some good earnings reports at the end of the year? They call it the Santa rally. But no, in fact, that was the pullback that led to the push all the way to the high of February 2025, which was earlier this year. Okay. What you need to see that's happening right now is that we could be entering a bear market. That happens. Okay, this pullback, if we want to compare the pullback that we're in right now, 26%. That 26%, we're at 17 right now, right? That's a 26% pullback. What happened in COVID? This is here. Here's your COVID crash right here, when everybody who was in the know on the pharmacy products jumped into pharmaceuticals and made a killing. It wasn't me. I'm a little bitter by that, but that's why some of these people make money and we don't. 35%. So the question is this really as uncertain as COVID? Are we really going to see a 35% drawdown in the market? It's possible. All right. But this is not right now at 17%. This is bad, but it's not the worst that we've seen. Okay. And then what happens? This is actually a V rally. They call it a V what do you call this thing? A V rally because it looks like a V. So it dropped from February 2020 down March. It lasted like a month of a pullback, and then pretty soon it was off to the races. All of this money that they injected in the economy, trillions of dollars in the checks that they sent out with the PPP loans and all that stuff. But this is part of what caused runaway inflation because you just flooded the market with a bunch of fake money. Everybody's going out buying Nikes. Most people didn't invest that money, as you could imagine. And then we ripped. We ripped up from when? We ripped up from 2020 all the way up here, a little bit of hiccups in the way, and we went up 140%. Okay, so 35% pullback, 140% rally. Okay, and what I want to show you, the reason why I kind of marked out this little rectangle area here is that during this time, if you would have had your money in the stock market from August of 2021 all the way to August of 2023 for 2 years, you made nothing. That's what some people don't realize. Like, you had your money in the market and you literally did not make a profit because you were break even essentially. Like, the market was trading sideways. If you notice the high, the low, the high, notice how this price actually stayed in this position. Everything in this range. Let me extend this out a little bit more here so you can see it. You're break even. Like, you spent 2 years where your money didn't grow. That's what I want to help people avoid. I want you to empower yourselves to be able to know how to trade in the stock market, to not just buy and hold, to be able to look at the trend and then either be in or be out. And this is what I do. This is what I do with the funds that I have in the 401ks. This is not short term. This is the retirement accounts. If the trend is up, I'm in. If the trend is down, I'm out. And math and stats have proven over time that if you, when the market is heading down, pull your money out in cash, which you have the ability to do, money managers do not, you will do better than the person that goes through these peaks and valleys. You will do better. Okay? And I could send you, some resources of why that's true. All right. Are we in a downtrend? Maybe. How do I know that all of a sudden we have extended to the downside and we could be in bear market territory? I have friends that, study this every single day and they know way more than I do. We may be heading into another bear market, which means I'm not selling right now. But what I'm going to be doing is I'm going to be adding a hedge in my portfolio. Let me see if I can find a tool over here to draw some stuff for you if I can. All right, cool. I can barely see. All right, check this out. This is where you know for certain that the market is in a downtrend. That's not what I wanted right there. I want this to copy. All right, cool. So how do I know that the market is in a downtrend right now? On the daily time frame. The reason why I know that is because the market is, wait for it, drum roll please, making higher high and lower lows and lower highs. Clearly, this is objective. This is not emotional. On the daily time frame, you have a high, you have a low, you have a high, and then you have a lower low here. We're breaking down, folks. So we are beginning what might be the beginning of an extended downturn. Now, one of my mentors, who knows a whole lot more than I do, likes to say that this white line, which should be on this chart, if I haven't changed it, it should be the 20 SMA. Yep, it's SMA. I like the SMAs on here. Okay, cool. The white line is home base, and we are extended away. We are extended away from home base on the daily time frame, which means nothing ever goes straight down and nothing ever goes straight up. Prices trend, which is why you don't have to panic right now. Okay? Now, what should happen over the next several days? Probably Monday. This thing, I was talking to a friend of mine, this thing could do what's called a rip your face off rally and suck in all the people that think that it's going up. You never ever buy in these lows because you don't know if you're catching a falling knife. Okay? I did ask people to buy. I did tell people. I didn't ask people to buy because I'm not a financial advisor. I did tell people that I was buying when the market pushed up into here, but I'm sized correctly to endure this downturn. What I am going to add is a hedge now. Now that I have a downtrend, a hedge that I'm going to start putting a short position on through a vehicle called URPIX when price comes back up to this 20. Now this is a daily time frame. Let me show you a weekly time frame, which is even more pronounced. Weekly time frame, look at the white line. The white SMA is up at 584. We're really extended on the weekly time frame. And guess where else we're extended? We're extended on the monthly time frame. Actually, no, I'm sorry. I take that back. We're not extended on the monthly time frame. Actually, this is one of the reasons why, another reason why we shouldn't freak out too much. If you notice, even this pullback here did not hit the 50 SMA on the monthly time frame, which is a higher time frame, and the COVID drop pushed just briefly below the 50 SMA. And so you can see how history, like, you know, on the monthly time frame, price touches this 20, it may touch the 50, but then it pushes up. And so this is my prediction. Again, take this with a ton of salt. The market is going to wait to see what the reaction is on these Trump tariffs, if that's what it is. And then it's going to rebound and just rally, because if this whole thing works out, if the tariff thing works out, and then, you know, nations start to, like, you know, treat us a little bit better than they've been treating us, trade imbalance is going to improve, interest rates may improve, and then that's going to put, you know, it's going to put some fuel into the, you know, the bull case. All right. So my plan right now is that I'm going to put a hedge, which is a short position once we get back to the 20. And I will lose that hedge. I will sell that hedge if and when we create a uptrend that is confirmed. I'm not selling, all right? Unless I get a red sell signal on my positions, then I will go to cash, and I'll let you know. I hope this has been helpful. I hope this has been informative. Do not make decisions based on emotions. Make data-driven decisions. Make rule-based decisions. I think that I've shared everything I wanted to share on this video, and I hope it's been helpful. If anything, we just want to continue to be mindful. None of this stuff is ours anyway. You don't get to take it when you die. Ask the pharaohs in Egypt. And the only thing that I believe that we are is stewards of God's stuff and money. And we just want to do the best we can. So I hope this has been helpful. If you want to subscribe to my free newsletter that I send out whenever I put out a trade, you can just drop a comment in the comment section of the video and just put your email, and I'll be happy to add you to the free newsletter that I do for free, because I really want to help as many people out as possible to do better with God's stuff. All right, take care.